Hello, everyone, and happy Financially Lit Tuesday. I'm happy to be back at it again every Tuesday at 6:30 p.m., bringing you news, tips, and tricks on how to wealth up. So today we are going to be going over the Elon Musk story about the $15 billion tax bill, right? And we're going to talk about, how to avoid it, things that you should know as a business owner, ways that you can decrease that tax liability because tax season is literally like less than 2 months away. So you definitely want to make sure you have it together before year end because it's going to get serious, right? All right, y'all. For those of you tuned in, go ahead and hit the share button so that all your friends and family know to tune in to this Financially Lit Tuesday. Like I said, we are talking about tax bill and how to cut it down because we are not trying to pay a bunch of money in taxes, right? Those of you also tuned in, go ahead and drop a comment so I know who's tuned in with me. And if you're tuning in from the Sipping Wealth YouTube channel, then go ahead and hit the subscribe button and the notification bell so that you do not miss any Financially Lit Tuesdays in the future. And so you can stay up to date on all the wealthy knowledge out here, right? I'm trying to wealth up. So I'm going to go ahead and get started, break down the story. Like I said, go ahead and hit that share button, drop a comment, let me know who's with me, and tune in. I do want to start by saying because of course I'm going to go ahead and put this out here. So we are having a wealthy brunch if you're located in Jacksonville, Florida. So be sure to head over to the event page for the wealthy brunch, and I'll talk about it some more later on. So for tonight's episode, like I said, we are close to the end of the year. So I definitely want to make sure that I turn your attention to some year-end some activities for our business owners because we are about to hit 2022. We want to hit it right. You know, who's ready for 2022? It sounds like a mouthful. So on Saturday, Elon Musk tweeted asking his followers whether or not he should sell 10% of his Tesla stock. So due to the current public opinion of unrealized gains being a means of tax avoidance. So basically, like Elon Musk's worth is tied to his stock earnings, his stock with Tesla. So he's essentially a multi-billionaire because of his shares in Tesla. So, but these are all unrealized gains. So essentially, he has a $0 tax burden every year because he doesn't get paid from Tesla. He just receives shares as a part of his compensation plan. So when he received those shares, he doesn't get paid, but he used those shares to essentially as leverage so that he can get loans and loans. He used it as collateral and leverage so he could get loans and basically live his life, right? So, but we have these unrealized gains, and he's basically living out here, living his best life. With these unrealized gains, and he's a multi-billionaire because of it. So he asked the public, "Hey, should I sell 10% of this? Like, let me know what y'all say I will do." And you know what? The public came through and was like, "We want you to do it." So actually came in pretty close. I thought it was gonna be like a complete like landslide. I thought it was gonna well not a landslide, I guess the opposite. Well, whatever. I thought it was like gonna be majority like 80% yeses and then maybe a little 20% no's. But it was actually 50, almost about 58% of the people said yes. And I'm like, oh wow, they care. So now he's faced with the okay, I gotta sell 10% of my Tesla stock. Is he gonna stay true to that? So Elon Musk was awarded options in 2012. So as a part of his compensation package. So he was awarded 22.8 million shares and at a price of $6.24. Hey Rick. Hey, how's it going? Hey. So yes. So because he doesn't take a salary, his, like I said, his wealth comes from his gains in Tesla. So over the years, as Tesla increased in value, his shares do as well, and his value as an individual does the same. So Tesla recently disclosed that that he does take out those loans to use as collateral, but if something were to happen with those with the valuation of those stocks, say the company tanks or whatever the case may be, then he will be for these banks are gonna basically say, yo, like we need you to sell those shares so that you could pay us back our money. So he can be forced to actually sell his shares in order to pay back some of those loan obligations. So Tesla shares closed at $1,222.09 on Friday. So meaning his gains on those shares was just under $28 billion. For the sake of this conversation, we're going to say $28 billion is how much his shares is worth. So before, back in 2012, he bought it at $6.24 per share. Today, that is $1,222. So definitely like a huge increase, as you can see, right? So like I said, if the stocks were to decline drastically, then the banks and the institutions could say, hey, we want you to sell off your shares in order to pay us back our money. And I also want to make, I know, we're most of us, or basically all of us, tuned in, we're not dealing with billions of dollars in shares, right? But how this is can be relatable to you is, hey, if you do own shares in other companies and things like that, and you have unrealizable gains, which is you have everything in your brokerage profile and you didn't actually transfer it and take it out and cash out into your bank account, right? Or take that money out. So you have unrealizable gains of thousands of dollars, right? So it still can be relatable to you. So say you're like, hey, you go to the bank and you're like, I do have assets, I do have money, it's just unrealized. And you go to the bank and you're like, hey, can you give me a loan based on my stock profile? They actually can do that because it's still a part of your net worth. Now, if the stocks that you're invested in that like tanks, then they could go ahead and say, just like with Elon, hey, we're gonna need you to sell those shares and pay us back our money, right? Um, so the options expire in August of next year. So August 2022, he has to exercise that or pay the income tax gains on the amount of money. Since the options were taxed as employee benefits or compensation, what actually happens is he gets taxed at the top ordinary income tax level. So when you're talking brackets, right? Um, the different tax brackets being, hey, whatever you may fall in under, depending on the amount of income you have. So of course, with this amount of money, it's going to be at the top one, the top level, right? In this case, 37% for this year, right? So 37%. And then you have an additional 3.8% in net investment tax, right? On top of that, y'all, it gets a little crazy. All right. On top of that, he also has tax for the state of California. And once again, he's going to be taxed at the top rate, which is 13.3% for the state of California. Because he was in California when he gained majority of his earnings on his shares. So with combined with state, federal, that investment tax, all that put together, 54.1% in taxes, right? So that would be about $15 billion that he would have to pay in taxes, which is the name of the live, right? So basically what he's faced with because of this question he posed to his audience. So essentially, Elon Musk is an unrealizable billionaire, right? So he has all this. He has the ability to leverage his stock profile and build his life the way how he sees fit. He doesn't have to get paid because he's able to use that as leverage. Um, so like I said, most of us we're not sitting here with a giant tax bill due to billions of dollars in a stock profile, right? But if you do own an LLC, sole proprietor, you're hit with LLC sole proprietor, or you're a 1099 contractor. You're hit with income tax plus self-employment tax, right? So that can be income tax, whatever bracket you may fall under, depending on how much income you earned. And then that self employment tax, that's 15.3%, you know? So it can be a pretty hefty tax bill as a LLC, sole proprietor, at 1099 contractor. And surely, of course, as business owners, you do get to qualify if you do make sure that you have different things in place. There are tons of credits out there as business owners, and then you get to itemize your expenses. You get to write things off. So it does help with that tax bill. But if you're wanting to show income in your company, or maybe your company was profitable, you're stuck with that tax bill. So of course, you know what I'm about to say. If you're not keeping accurate books, you don't have a bookkeeping system put in place, or you didn't hire Grand Rev, then you're going to be dishing out so much money in taxes, or you're going to have so much time devoted into trying to gather all those things up at the end of the year, or at the beginning of the year when it's time to actually file your taxes, because throughout the entire year you weren't keeping track. And bank statements are not enough, y'all. We need receipts. We need to make sure we have accurate bookkeeping put in place. You have to, because in case of an audit, you're not prepared and you don't have it, and then you're going to be stuck with the tax bill anyway. So what was the point of writing all that off, right? So make sure that you're not having to spend all that time, because as business owners, more than anybody how much time goes into operating your business, growing your business. If you're in product based, you have to do shipping, you have to purchase from suppliers, you have to package it and ship it to your customer, but you also have to make sure that your customer is satisfied. You have to do marketing. There's so many different aspects of your business to keep track of. Bookkeeping, it gets negated so many times, or tracking the finances, doing that becomes second. It becomes like, okay, secondhand, we'll worry about that later. And then you don't, and then it's tax time, and you're faced with a huge tax bill, or you're having to write off everything, and then it shows that your business is in a negative, in the hole, and now you can't apply for funding and loans because your business is not profitable, right? So let's just do it the right way, y'all. So that we can do it. And also, if you're a product-based business, you have state sales tax, right? So I know y'all know how it feels. So now you have state sales tax as well, that you have to file on the annual, quarterly, or monthly basis. So I say this to say, make sure you have good bookkeeping procedures put in place, or you have a great bookkeeper at Grand Red Financial. You continue to complete your reports. And then once you do that, you have your reports, you have everything you need for your tax preparation and to get your tax bill down by taking advantage of these credits that I'm about to go over. Before I go over these credits, go ahead and hit that share button, because I'm going to go over some hefty credits for business owners to really take advantage of. Like, these are things that you can implement in your business to get your tax bill down without having to hurt your income. These are credits, so they're not deductions. They don't have to decrease the amount of money that you made in your business, but they will help decrease your tax bill. Excuse me. Ooh, a little thirsty. All right. So if you're a new business owner, or you're behind on your taxes, like, stop paying those late fees, interest, penalties, things like that. We're gonna do it right the right way. So some of the credits I'm gonna go ahead and go over. Like I said, go ahead and hit that share button, y'all. Don't keep the wealth to yourself. I always say that. I don't keep it to myself. I go live every Tuesday at 6:30. Right? We have a YouTube channel, Sipping Wealth. So all the lives, everything that we ever gone over is on our YouTube channel. You could literally go over there and search whatever topic you're wanting to learn about. There are tons. There's probably over 80 episodes in there at this point because I've been doing this for over a year now. So I'm out to get into these credits. So first credit is the small business health insurance premium. So with this credit, this is for our business owners that pay for. We have a lot of solopreneurs out here. So if you structured your business where you pay for the health premium of if you have less than 25 employees, which is majority of small businesses, and actually majority of them are solopreneurs anyways. If you do that and pay at least half of your employees health insurance premiums, then there is a credit for that. I mean, there's yes. So there is a form that you go ahead and put fill out to help decrease that tax burden because you are making those insurance tax premium payments. So another one is the employer credit for paid family and medical leave. So for those employers that are paying for their employees to take off at least 2 weeks of paid family, medical, and leave and sick leave, um, well, medical leave, then you could, or at least 50% of their wages. So if you pay them $2,000, you have to pay them at least $1,000 um, during their leave, so that this credit can apply to you. So if you do that, then here's a credit. Get into them trust funds. So we'll talk about trust funds later. But yes, definitely we're gonna wealth up. And this way is making sure that we take advantage of tax credits and to decrease the tax burdens out here. So we do have that employer credit for paid family and medical leave. All right. This credit helps, decrease that tax burden. Then we have the working opportunity credit. So this is great because it helps with if you hired on any like veterans, any low income individual that's on family or food stamps, family assistance or food stamps, any ex felons, um, things like that. So if you have employees that meet that requirement, there's a work opportunity credit. Then we have our research and development credit. So our credit for increased research activities. So for my people that are developing prototypes, that are getting patents out there and things like that, there's a credit to help with all that money that you're dishing out to develop that product. You have your disabled access credit, your employer provided child care facility credit. So you do have a lot of credits to go ahead and take advantage of. You have your motor vehicle alternative fuel credits, electric vehicle credit. I know quite a few of you are familiar with the electric vehicle because of the Tesla cars. But yes, that credit out there. You have employer Social Security and Medicare tax paid on the employee tips. You have the pension plan credits, retirement funding credits, new market credits. So for those of you in the real estate market, there are credits having to do with uh, doing fix and flips as well. So there is definitely a lot of credits out there to decrease the tax burden. When I say make sure before you go into the tax year that you have a tax strategy, it is absolutely crucial because this is how you're going to decrease it without having to show such a poor net gross income at the end of the year. All right. So for my business owners, something else to be aware of, because I see a lot of my business owners that are getting hit with tax penalties because they are not making estimated tax payments. Y'all, estimated tax payments, please Make sure you are making these payments so that you're not hit with these penalties. You don't want to, it's money that you're basically giving away because you didn't make quarterly payments. And they don't have to be huge, right? Depending on how much you made during that quarter, you send off a certain percentage of that money to the IRS as an estimated tax payment. So, like our W 2 employees, they pay into their tax bucket every time they get paid, right? Federal withholding. That's what the tax bucket is. But my employers or my for my business owners, you have this estimated tax payments that you have a tax bucket too that you have to pay into. And if you don't, then you get to the end of the year and you owe, taxes, you get hit again with a tax penalty for not making those payments. So just go ahead and do it quarterly. Um, the next one is due in January. But if you didn't make it throughout this year yet, you can still make payments for the past quarters during this year. So it's not too late. Hey, Nikki. Hey, girl. Hey. So if you haven't made those estimated tax payments, go ahead and do that. You don't have to say, oh shoot, the quarter is gone. That's it. You can actually make it for past quarters, like I said, during this year. Um, so do you expect to owe less than $1,000 in taxes for the year? Where do you see yourself as far as your tax burden for this year? If you're like, I don't want to look at it because it's probably something crazy, then you probably should be booking a call with us, right? You should go ahead and text that number on the screen or head over to our website to have this conversation now versus when we're in a rush to meet the deadline. Um, so like I said, you definitely do. I see any questions? Okay. So if any questions come in, if you have any questions, feel free to drop it in the comment section. I did want to make sure that I touch on these tax benefits that you could take advantage of and to not, push it to the wayside. Don't say, hey, I'll worry about it later, because later is going to cost you money. It's going to cost you money and time is money. So at the end of the day, it's going to cost you even more money. So do make sure that you're getting it done ahead of time because it's going to save you in the future. Um, so lastly, other ways to avoid paying, with those high tax bills is using that 401k. As a business owner, you can start your own pension plan. Under your business, you can have you can set up our investment accounts. Your business can actually invest in securities as well. So make sure that your business is structured properly. So make sure that you have the right tax structure for your business. If you don't know, reach out to us. Hire your children, hire your spouse, hire your family members, hire the people that's already going to be on your taxes anyway. Set a retirement plan for them. Set a college savings plan for your child. Set a life insurance policy, whatever the case may be. Go ahead and set these accounts up for your child, especially a health savings plan. So a health savings account, we're gonna go over that next week. So next Tuesday for the episode of Financially Lit Tuesday, we're going over HSA account and why you need an HSA account. You are leaving money on the table. I'm going to tell you why, right? So make sure you are tuned into Financially Lit next Tuesday. And if you're like, oh my gosh, I have to go to I don't know church next Tuesday, I can't make it, then make sure that you're watching the recap, so that you can make sure that you have all the reasons why you should have an HSA account because you're leaving money on the table. In short, but I'll go into detail next Tuesday. So thank you for those of you that are tuned in with me for this episode of Financially Lit Tuesday. Like I said, we are having a wealthy brunch next Sunday. So that's Sunday, November 21st. We are having a wealthy brunch located at One Bridge in Regency Mall. So we are going to have a prefix breakfast. So it's going to be catered by 3J's Catering and also Teapots Naturals. So we'll have vegan options. We'll have regular options. We're having like maple honey chicken and shrimp and grits and eggs and chicken and waffles and mock chicken. It's gonna be great. And we're gonna have bottomless mimosas. We're also going to have three amazing speakers that are going to touch on wealthing up and how they've wealthed up themselves and how they help others wealth up in their different industries. So we have Nikki. She's a non-for-profit amazing woman that launched two awesome non-for-profits. So she's going to be speaking on the non-for-profit sector. We have Alexis. She has a hair care line. She has a hair oil that I actually use on my hair. And she's also a serial entrepreneur that's really around the city hosting different events. So she's a great host. She also has a women's network as well, Savvy Ladies. And then we have Jason Scott. So Jason Scott is a broker and realtor and real estate investor. He's with Remax Supreme and with Four Kings Investment Group. So he will be touching on, like I said, everyone will be touching on their different industries. So you'll be receiving a wealth of knowledge during that as well, to how to tap into those different things, but also, the stories that go along with them. As well as myself, I'll be speaking at the event as well on money mindset, making sure that we have the right mindset going into money as well, and different tips that you can use to wealth up moving forward. So that brunch, like I said, is next Sunday on November 21st. You don't want to miss it. The tickets are on Eventbrite. You can type in wealthy brunch and it'll come right up. Also on the Grandma Financial page, on my page. So on all social media platforms, you will see advertisement for the wealthy brunch. And you can go ahead and grab your tickets. Also, Facebook Events has it as well. So, yes, thank you, y'all, for tuning in. Like I said, to another episode of Financially Lit Tuesday, every Tuesday at 6:30 p.m., bringing you news, tips, and tricks on how to wealth up. Thank you, y'all, for tuning in, and y'all have a wonderful, amazing rest of your Tuesday. Yay.